Hi traders, and welcome to this short video which provides you with an example of a recent trade of ours. This is actually a trade that we took towards the back end of 2017, so it's a few weeks ago now, but nonetheless it's a really good example of how we trade and kind of broadly what our strategy looks like. If you follow our material on social media and through our website, then you probably will be familiar with this setup because it is very much a core part of our strategy. But any good trader who kind of has the discipline and patience to wait for the setups to occur will also find that their setups are very repetitive, and really it's just a case of knowing what to look for in the market and having the patience to sit there and wait for that to set up in a way that aligns to your strategy rules. So let's dive into the charts and take a look at how we played this trade out. So the first thing to note is a strong support and resistance level around 1239, and that's this level here. So we can see historically we had a touch here, it flipped around and we had a touch there, the same again here, and then again here. So this has created quite a significant support and resistance flip zone. So as we move forward and then closer towards the end of 2017, and if we zoom in, we can see that price sold off quite strongly, and we can see that by the size of the bearish candles that came in and the fact that price was closing kind of reasonably towards its lows, which shows there was a fair amount of momentum to the downside coming into the market. For us, as price approached this key level, we were kind of very much keeping a close eye on it, and the first clues that we got that there may be a potential trade setting up for us was the fact that price started to kind of slow down, and we can see that by some smaller candles forming here. We actually got this smaller, almost kind of like a doji candle here. It's not quite a doji, but it's starting to kind of feel like that, but it certainly gives us a clue that there's some indecision in the market around this key level, and it gives us an indication that price to the downside is starting to slow down. At this point, we need a little bit more confirmation that price may turn around at this point. And then we actually got that on this kind of strong bullish candle here, with really what we would class as a kind of a fairly significant push away from that key level. So this for us gave us a bias to the long side, and part of our strategy means that we need to drop down to the lower time frames to time our entry into the market. So let's take a look at that time frame now. So here we are on the hourly chart, and the first thing that we can see, which does form part of our strategy rules, is MACD divergence across the prior lows. So we can see as price was trending down and making lower lows, we can see that the MACD at the same time was starting to trend upwards. So we can see some divergence between the two, which for us gives us a clue that momentum to the downside is starting to fade. We can also see here that price made a higher low, so it failed to make a new low, which again is another indication that price is starting to kind of fade in its momentum to the downside. And this has also produced a kind of a small inverted head and shoulders pattern here with the left shoulder and then the head here and then the right shoulder. So the neckline kind of comes in around this level that we've got marked in, and we can see that then price subsequently breaks out. So just referring back to the daily time frame, when we talked about that strong bullish candle that eventually gave us our bias to the long side, that's actually formed here through this price action here. So we can see that as price broke out of this kind of inverted head and shoulders, it also broke the 50 EMA at this point, which is another part of our strategy. So at this point what we're looking for is a pullback for us to initiate a long position. And what we can see here is we actually did get the pullback, and this coincided with a prior support and resistance level. So we can see that we've marked that in here where we got these prior highs. We know that once price breaks previous resistance, if it returns to that area, that resistance can now act as support, which it did do here. And this area also aligns to the daily pivot, and that's kind of we've not shown it on this chart at the moment just for the sake of keeping the chart clear, but the daily pivot did align perfectly to this level as well. So we had multiple confluence factors which enabled us to take our long trade. So we entered with a buy limit order on this level here, and we put our stop loss just below the low of this kind of strong bullish candle here. and our target was actually this prior level here, and we can see there was some support lows formed here and here. So this for us was a good place, or a logical place, to actually exit the market. And you can see we just labelled up on the chart here what that actually resulted in, and we can see that was a 1.77 R gain. One thing to kind of point out about this trade here is that, you know, we exited the market at a logical point for us. So, you know, we do trade kind of from one level to the next, and we felt that actually we could expect a bit of downside pressure once price reached this level here. And in fact, we can actually see that that's exactly what occurred. Price hit this level and then started to sell off again. So in the short term, that we were kind of right to exit where we did. However, we can see, if we zoom out slightly, that price actually went on to have quite a significant rally. Now, what we can do here is just increase this, and actually if we'd held the position, what we would have been looking at is over a 12R return on this trade. Now, one thing that an amateur trader or a would-be trader who's kind of looking to kind of get into the realms of profitability, one mistake that they would actually make in this situation is think, well, if only I'd held that position, I could have made, you know, 12R on this trade. That's actually quite a dangerous way of thinking, because what that person might do now actually is think to themselves, well, the next trade that I enter, I'm going to hold it. In actual fact, what will probably end up happening, if we just remove that from the chart and zoom back in, what will end up happening is that they will try and hold that position, and this reaction will occur on their next trade, and price may end up actually trading all the way back down here and then actually hitting their stop loss and taking them out. And it's kind of a trait of an amateur trader is that they will flip between one style and the next. So on one trade they might take their profits at a logical point, on the next trade they might try and run it and actually find themselves being stopped out. So one thing you have to make sure you do is kind of disassociate yourself from the end result and actually apply consistency in the way that you trade. Now, we've said before that keeping a journal is a really important part of trading, and what we did on this particular trade is acknowledge the fact that price actually went on quite significantly in our favour after we exited the position. Now, if we find over a series of 40, 50, 60 trades that happens consistently, then we know with some certainty that we are exiting our trades far too early, and we can look to make some modifications to our strategy to kind of look to capture some of those moves going forwards. What you can't do is make a decision based off on one trade, and you know, that's what some people may have done in this situation. They may have looked at the fact that you could have had a 12R return on this trade had you held it, but you can't make decisions based on one trade in isolation. You need to have a significant sample size, and you need to make decisions based upon that sample size, and that's the only really the only way that you can do this, and actually kind of maintain your consistency in the markets. So that's it for this example. Just to recap, that is gold. It was long, a long trade, and it was a 1.77R return for us. Please do look out for our future examples on our social media channels and on our website.